Hello everyone, and welcome back to the channel. Today, we're diving deep into a fascinating and incredibly useful tool for traders, the parabolic Sar indicator. Have you ever looked at a chart and wished you had a crystal ball to tell you when a trend might be ending or reversing? Well, while it's not quite magic, the parabolic Sar gets pretty close. SA stands for stop and reverse, and that's exactly what it helps you do. Identify potential points to stop your current trade and reverse your position. Developed by the legendary technical analyst J. Wells Wilder, Jr., the same mind behind the RSI and ADX indicators, the parabolic SAR is designed to follow the price action of an asset and signal when the momentum might be shifting. It appears on your chart as a series of dots, either above or below the price candles. Think of it as a loyal companion to the price, trailing it during a trend. When the dots are below the price, it suggests an uptrend is in play. Conversely, when the dots appear above the price, it signals a potential downtrend. The real magic happens when these dots flip from one side to the other. That flip is the stop and reverse signal we're looking for. So, how do you actually read this on a chart? It's simpler than you might think. Imagine you're watching a stock that's been climbing steadily. You'll see the SAR dots trailing below the candlesticks, moving up with the price. Each dot represents a potential trailing stop-loss level for that period. As the uptrend continues, the dots move closer and closer to the price. This is because the indicator has a built-in acceleration factor, which makes it more sensitive as the trend matures. If the price rally starts to lose steam, stalls, or pulls back even slightly, it will eventually touch or cross below the SAR dot. The moment this happens, the party's over for the uptrend, at least for now. The indicator will then flip, and a new dot will appear asterisk above asterisk the next price candle, signaling the start of a potential downtrend. This flip is your cue to consider closing your long position and perhaps even opening a short one. The same logic applies in a downtrend. The dots will be above the price, moving lower along with it. If the price starts to rally and breaks above the SAR dot, the indicator flips again, with a new dot appearing below the price, suggesting the downtrend is losing its grip and an uptrend might be starting. This simplicity is one of the biggest strengths of the parabolic SAR. It gives you clear, visual signals that cut through the noise of market volatility. It's not just telling you the trend direction. It's actively tracking its momentum and giving you a dynamic exit point. This makes it an excellent tool for implementing a trailing stop-loss strategy, helping you to lock in profits as a trend progresses and protecting you from sudden, sharp reversals. Now, let's get into the nitty-gritty of how to actually use the parabolic SAR in your trading strategy. The most straightforward method is to use it for entry and exit signals. A simple strategy could be by when the dots flip from above the price to below it, and sell or short when the dots flip from below the price to above it. This works wonderfully in strongly trending markets. When a stock or currency pair is in a clear, sustained uptrend or downtrend, the SAR will keep you in the trade for the majority of the move, helping you maximize your gains. However, and this is a big however, no indicator is perfect. The parabolic SAR has an Achilles heel, sideways or ranging markets. When the market isn't trending strongly and is just bouncing around in a consolidated range, the SAR can give you a lot of false signals. You'll see the dots flipping back and forth frequently, which can lead to a series of small, frustrating losses, a phenomenon often called whipsawing. This is where the importance of context and confirmation comes in. You should never, ever rely on the parabolic SAR alone. To filter out these false signals and improve your odds of success, you need to pair it with other indicators. A great combination is using the SAR with a trend-confirming indicator, like a moving average or the ADX. For instance, you could decide to only take the buy signals from the SAR when dots flip below the price if the price is also trading above a long-term moving average, like the 200-period MA. This ensures you are only trading in the direction of the dominant, long-term trend. Another powerful combo is parabolic SAR with the average directional index, or ADX. The ADX is designed to measure the strength of a trend, not its direction. A reading above 25 typically indicates a strong trend is in place. So, your strategy could be to only act on SAR signals when the ADX is above 25. If the ADX is below 25, it suggests a weak or non-existent trend, meaning the market is likely ranging. In that scenario, you would ignore the SAR signals and avoid trading, saving yourself from potential whipsaws. This disciplined approach of using confirmatory tools transforms the SAR from a simple signal generator into a key component of a robust, well-rounded trading system. It's about stacking the probabilities in your favor. Let's also talk about customizing the settings. Most trading platforms default the parabolic SAR settings to an acceleration factor of 0.02 and a maximum acceleration of 0.20. These are the standard settings recommended by Wilder himself, and for most situations, they work just fine. However, you can tweak them to better suit your trading style or the specific asset you're trading. If you decrease the acceleration factor, say to 0.01, the indicator will become less sensitive to price changes. It will trail the price from a greater distance, resulting in fewer, but potentially more reliable, signals. This might be preferable for long-term trend followers who want to avoid getting shaken out by minor price corrections. On the other hand, if you increase the acceleration factor, the indicator will hug the price more tightly and react much more quickly to changes in direction. This will give you more signals and earlier entries, but it will also make you much more susceptible to whipsaws in choppy markets. This might appeal to short-term scalpers, but it requires very active management. My advice: start with the default settings. Get a feel for how the indicator behaves on your chosen timeframes and assets before you even think about changing them. Master the basics first. To really bring this home, let's walk through a hypothetical trade example. Let's say we're looking at a daily chart of a popular tech stock. We notice the price has been trending down for weeks, but it's starting to show signs of bottoming out. We have our parabolic SAR on the chart, and we also have the 50-period moving average. The SAR dots are currently above the price, confirming the downtrend. We wait patiently. Then, one day, we see a strong green candle that pushes the price up, and it finally breaks above the SAR dot that was trailing it. The SAR flips, a new dot appears below the next day's candle. This is our potential entry signal, but we don't jump in just yet. We check our confirmation indicator. We see that the price has also decisively crossed above the 50-period moving average. Now we have two strong signals aligning. We decide to enter a long position. As the new uptrend develops, we use the SAR dots that are now forming below the price as our dynamic trailing stop loss. Each day, we mentally or physically move our stop loss up to the level of the latest SAR dot. This allows us to protect our profits while giving the trade room to breathe. The stock continues to climb for several weeks. Finally, the momentum wanes, and the price drops, touching the SAR dot below it. The SAR flips again, with a new dot appearing above the price. This is our exit signal. We close our trade, locking in a substantial profit, and we did it all with a clear, predefined plan thanks to the parabolic SAR. In summary, the parabolics are a powerful and intuitive momentum indicator that is fantastic for identifying trend reversals and setting trailing stop losses. Its main strengths are its simplicity and its ability to keep you in a trade during a strong trend. However, its major weakness is its poor performance in ranging, non-trending markets. To use it effectively, always combine it with other tools, like moving averages or the ADX, to confirm the trend strength and filter out false signals. Remember, no single indicator is a holy grail. Trading success comes from building a comprehensive strategy, managing risk, and maintaining discipline. The parabolic SAR is just one excellent tool you can add to your toolbox. Thank you so much for watching today's deep dive. I hope this explanation helps you understand and use the parabolic SAR more effectively in your own trading. If you found this video helpful, please give it a thumbs up. It really helps the channel grow. And if you haven't already, make sure to hit that subscribe button and ring the notification bell so you don't miss our next video. Do you have any questions about the SAR? Or is there another indicator you'd like me to cover? Drop a comment below. I love hearing from you all. Until next time, trade safe and trade smart.